Pankaj Murarka is with us, CEO and CIO at Renaissance Investment Managers. Pankaj, good to have you with us here. Thank you for your time. Will we, as we come back next week and, will we start to look ahead? Will we start to factor some of this stuff in, which has been going on, which has been top of mind, which, of course, is the India-Pakistan, the military escalation from Pakistan and the response, etc. What's your sense?
Welcome, Prashant. I think it's very unfortunate, but I clearly think that, Prashant, I would like to think about this more as an escalation than a war. I think it's clear that we've been fighting this proxy war now for almost 4 decades as a country, and India has drawn a new line in terms of its both in its tolerance levels and also in terms of its response to some of these proxy attacks that India has been witnessing. Given the fact that I've said this is one of the biggest risks that India faced. I've always believed this over the last 20 years, is we have the most troubled neighborhood because we are the only country in the world which shares physical borders with two nuclear powers. No other country in the world shares that. So that's our destiny. And 2 nuclear powers, I firmly believe, cannot go to a war. So the ultimate end game of this is probably there's a new defense doctrine that India is now practicing in that sense. Eventually, over a period of time, I don't think so it's happening immediately, but eventually over a period of time, I think we need a new peace doctrine with Pakistan. The Shimla Agreement of 1972 is stale and irrelevant in today's context because proxy war did not exist then. Technology and a lot of other things have changed. Economic power has changed since then. So be that as it may be, I still think this is an escalation, and probably in a few weeks' time, we'll see de-escalation on that. The good thing is India's economy is fairly resilient, and we can deal with this without having any negative rub-off effect on our economy, and that's the real power. As all of us know, as Bill Clinton said in 1990, it's all about the economy, stupid. So it's all about economic power, which translates into all the other things. And the good thing is that we are a pretty resilient economy in that sense. So I still continue to remain, I think, for investors from a medium-term perspective, that whole India story still remains very much in place.
Hi, Pankaj. Indeed, India will come out stronger from this as a nation, and the markets as well will recover in the time to come. Pankaj, but times like these provide opportunities. And in the past, we've spoken about various opportunities. So let's address one such opportunity, the financial and the banking pact. I think a couple of months or so ago, you were talking about the two large private bankers that actually had underperformed in the last few years, but could be looking up from here on. I think HDFC Bank and Kotak Mahindra Bank were the ones that we spoke about. Your view on the banking pact, and would you stick to these two?
Yeah, absolutely, Nigel. So one, we continue to remain positive on financials as a whole. Banking is a dominant part of that, and we continue to remain positive on other parts of the financial segment, including capital markets and fintech. Within banks, yes, we are preferred, holdings are or investments are HDFC Bank and Kotak Bank. Needless to say, we own both of them. We think that both the banks can start delivering industry-leading growth going forward, and clearly, meaning there is a room for valuation uptick as growth catches up in these banks. These banks have underperformed industry growth over the last 2 years, but we think that will change. From take a view which is slightly more medium term, we continue to remain positive on both the banks.
Okay, all right. Got that. So positive on both these two names. You all have been underweight on consumption, and part of the street that was actually underweight has suddenly started turning a little bit positive. How do you approach this theme? And I think there are select pockets that are still live from the consumption pack, right?
Actually, Nigel, we have actually turned positive on consumption in the last 3 months.
Oh, okay.
A gap of almost 5 years now. As investors, we have actually gone overweight on consumption. Our base hypothesis there is that we're coming out of a pretty sharp slowdown in consumption over the last 8 quarters, and aggregate consumption in the economy is at a pretty low base. Okay. So we see the recovery in consumption will be somewhat gradual, but we see a meaningful recovery in the consumption over the next couple of years, starting from second half of this year onwards. And it seems after a long time, a lot of stars have aligned for consumption recovery in the economy. We've obviously seen moderation in inflation clearly, and that has led to already 2 rate cuts from RBI. We clearly see at least 3 more rate cuts in this financial year going forward. And all of this should provide some impetus to the consumption. More importantly, real wages in rural areas are now growing at a healthy rate. So last 2 years, inflation was much higher and the wage growth was much lower. That's reversed. And probably we're also looking forward to that the tax cut which the government announced in the budget, that should help the pockets of the consumer as that money starts flowing in during the course of this year. And finally, the government has announced the formation of the
Got it.
8 pay commission. So once those recommendations are implemented, that
Yes.
will lead to a $50 billion of money in the hands of Indian consumers
Right.
for the next 3 years. So
Right. Got that, Pankaj. You were underweight, but now, as you're telling us, 3 months ago, you have turned overweight, and there are various themes and various reasons that you like this pack. By the way, keep an eye out on the bottom of your screen.
A quick word on the earnings season and anything which has stood out to you in terms of a big blowout number, something which has caused you to do something, change of view.
not
Or on the downside. Sorry, actually, I should have started with that because there's more disappointments than beats. Yeah.
Actually, the good thing is, I think in the one key takeaway, Prashant, for us from this earnings season has been that we have incrementally, there have been no incremental downgrades in terms of earnings. The last 2 quarters, the September quarter and December quarter, post the results, we have had meaningful earnings downgrade. This quarter, so it seems the analyst consensus expectations have aligned with where the economy is. And also, the second key takeaway I have from earnings season so far that we've witnessed is we've hit a trough in terms of the earnings deceleration. So probably this year, the year gone by, last year has been one of the slowest earnings growth in the last 5 years post-COVID, where Nifty earnings growth is just about 5%. But I think we should get back to low double-digit earnings growth or low teens kind of earnings growth going forward in this financial year. So I think the key takeaway is that, and clearly, I still think that the private banks have stood out in terms of earnings because asset quality has been pretty resilient despite some asset quality issues or some spillovers in terms of bad loans from microfinance sector. And the peak of their NIM pressures, I think, has played out by and large in that sense. So we see earnings improving for private sector financials meaningfully going into the next year.
Yeah. Pankaj, hi, good afternoon. And Nigel, interesting to hear you say that. I know you're a big IPL fan, but I guess at times like these, it is nation first. It's not, there's a logistics of it, of moving teams around, teams like Punjab, Delhi, a lot of the northern teams as well, and with many of the airports either shut or uncertainty. That's the logistical part of it. But even otherwise, in terms of sentiment, perhaps the play can wait.
Yeah, personally, I didn't go to watch the IPL till now, but I'd had something lined up next week. But I think this is a very, very logical move at this stage of time.
Yeah, absolutely. Can be reviewed. Hopefully things get better and then we can all get back to...
Everything else is secondary. The nation first, the border first, then markets, then IPL, then everything.
Absolutely. Couldn't agree more. 100% with you on that. On consumption, Pankaj, I was hearing you say that, you're changing your stance and you're now looking at it a little more favorably. Can you give us a little more color into what side of it? Because staples have been absolutely out, downbeat for I don't know how many quarters now. There are jewelry companies which have had a good cycle, but even their gold prices could be weighing. There could be durable players. So when you say that you're turning positive on consumption, is it actual staples or are you playing it differently? There are QSRs as well. We could talk about many wheels.
Sure, Surabhi, actually, we are playing, as I said, after a long time. After a gap of almost 6 years, we have bought staples. So after a long time, I'm finding staples exciting because we're already seeing early signs of recovery in volume growth in staples in rural India. In the month of December, we've seen double-digit volume growth in staples in rural India. This is something which I'm seeing after a long time. And we're coming out of a cycle where aggregate consumption has grown at about half the rate of nominal GDP growth. Generally, staples growth is pretty much in line with nominal GDP growth on a long-term average basis, which effectively means that what I'm clearly looking forward to is over the next 2 years, we're going to have a significant rebound in staples consumption from a low base. And valuations in staples companies across large cap and mid caps are pretty much in line with long-term averages. So a combination of being at a growth inflection point and reasonable valuations is something which I'm seeing in staples after a gap of almost 7 years. So which is where we've actually bought into staples. Some of the companies that we own in staples includes, names like Godrej Consumer, and some of the other mid-cap companies or small-cap companies like Imami and Jyoti Labs. And at the same time, given the growth bias for our portfolios, we certainly own discretionary consumption across names like Jubilant Foods and United Spirits, which is more a play on increase in discretionary consumption. So yeah, we're trying to play staples through both, a combination of trying to play consumer through a combination of both, which is staples plus discretionary.
Got that. All right, Pankaj, we'll leave it on that note for this afternoon. Thank you very much for being with us. I wish you a good weekend, and we look forward to the next conversation. I have to take a quick break right now. We'll come back with some